Hi everyone and welcome to today's morning report on Thursday the 18th of June with me, Richard Perry, market analyst at Hantech Markets. The European trading session has once again got off on the back foot, and that's sort of been driven more by, I think, the fact that we've got a latest Eurogroup meeting rather than the impact of the Fed. The Fed overnight was surprisingly dovish actually. The Fed sort of cut back its GDP forecast for 2015 and also had a surprising sort of dovish little shift in the dot plots as well of interest rate projections or Fed fund projections, and also Janet Yellen sort of alluding to the fact that there was the possibility of one or two rate hikes in 2015, and the US economy is sort of getting to that level, but it's not quite there yet, and that's why the Fed is just held off a little bit. So a slightly dovish sort of lean from the Fed, as opposed to potentially a hawkish one, which could have driven could have been driven by the recent improvement in data. So what we have seen is the dollar over the last few hours being under significant pressure actually. And here we see the dollar index, which had been consolidating for the past week in front of that Fed meeting, but bang, in the response to the Fed meeting, it's under serious pressure once again, down to the downside. 93.13 is that key low we saw from May. Certainly looks like it's coming back for a test of that. Interesting that we've also seen across the board on US Treasury yields a decline on the Treasury yield in response to that. And the yield curve has sort of been pulling lower in response to that dot plot that we saw, future rates coming out for 2016 and 2017, just the path of that those rate hikes being sort of just shallowed slightly by that dot plot, and the US yield curve has responded accordingly. But what we have got today is this big Eurogroup meeting of finance ministers for the Eurozone, and they're going to obviously be discussing Greece. Greece remains a massive issue for the Eurozone. Tsipras, the Greek Prime Minister, is coming out with increasingly sort of arguably divisive rhetoric in the last few days, and they are obviously now going to have to sort of come to some sort of agreement in the next few days, really. There's no expectation of a deal today, because apparently there needs to be a deal done at a heads of state level rather than just the finance ministers level. But obviously they can thrash out the potential deal today. However, it still needs to be taken from a heads of state level. So Angela Merkel, the German Chancellor, she said that where there's a will, there's a way. So obviously she's still hopeful, but at the moment there is no expectation of too much movement today on that in that Eurogroup meeting. In response to the Fed last night, we had the S&P 500 rallying. However, since then we've seen the Asian markets under a bit of pressure. The Nikkei, for example, down 1.1% as the yen has strengthened significantly overnight, and also in light of the Eurogroup meeting. Today we've seen the DAX and the CAC coming under pressure today, also the FTSE lower as well. Now what I thought I'd do, let me just look at what we've got actually on the calendar today. Sorry, my mistake. Calendar is retail sales for the UK. First up at 9:30. Forecast to come in at 4.5% on the adjusted number for the year on year, so still pretty strong. So that would be fairly supportive of this strong cable run that we've seen in the last few days. Big breakout on cable that I'll talk about in a bit. And then after that, this afternoon, another big US data release is the inflation data at 1:30. Forecast to come in at flat actually at 0.0, so an improvement on last month. But also for the core data, for the core CPI, it's actually forecast coming in at 1.8, which is in line with last month as well. So Yellen was talking about having rates on a path that the Fed was confident was going to be moving towards 2% in the medium term. So interesting to see the reaction there today to the inflation data. And then we've also got the weekly jobless claims at 1:30 as well, but that's forecast coming basically in line, 275,000 there, but the focus will obviously be on this key inflation data for the US. Right, my chart of the day is the dollar CAD. I've seen this dollar CAD now break down today. Had been trading between this range. Let me just show you the daily chart quickly. It had been in this range, sort of 122 to 123.50. It sort of fell over at 123.50 and is now broken down below that 22 figure level. Now that is sort of arguably produces a downside target of 150 basis points to the down. 150 pips to the downside, which gives us 120.50 as your initial target. 121.75 is the breakdown at the moment. Certainly looking at the momentum indicators, they're all sort of falling away quite sharply now. You had this bearish kiss or bear kiss on the stochastics where the lines come together and then come apart once again to the downside. So that is a pretty bearish signal actually. You also got the MACD lines falling away, RSI falling at a 1 month low. Sort of confirming the breakdown really, but what we have got is not a massive amount of support. Obviously you've got this congestion from the early May moves, but the major support doesn't really come in until 119 sort of 16 area. So there is the capacity for further retracement in this move lower. But what we also show you is that we've got this big sort of these pivot levels on the CAD do tend to work quite strongly. You had that old pivot level at 122.50, which provided support and then resistance again, and this latest pivot level that's broken down at 122. Sorry, that's 123.50. Sorry, my mistake. That pivot level 122 figure is that latest pivot level to break down as well, having been old resistance became new support and broken down to become new. That will become new resistance once again now. So that's a pivot level on the upside now. So that is now your first line of resistance to today in terms of this reaction. You've also got the resistance from the overnight sort of support, the overnight resistance levels that we saw building up around about that 22.37 mark. So you've got a bit of a band of resistance, 122 figure to 122 sort of 40 you would call it on this chart, and certainly the move initially to the downside certainly breaking down, the CAD strengthening and the dollar under pressure again. So you'd be selling into strength, I'd say, at the moment on this CAD dollar CAD chart. RSI on the hourly chart 22, so a little bit stretched, although again look at that, you've got another bear kiss on the MACD lines here, so that's a bearish move. Stochastics very bearish as well, so it is pretty bearish at the moment on dollar CAD near term. So I wish you good luck in your trading on the CAD today, and I will speak to you later.